A 720 credit score is supposed to mean you're safe. Good credit. Low risk. Easy approval.
And yet every day, people with scores like this get denied.
I spent 14 years inside banks watching this happen. Today, I'm giving you the 7 real reasons a good score still gets rejected. Reason half 1, to total. The score isn't the decision.
Most people think their credit score is the decision, but behind it is so much more. Banks see a lot more than one number: income, employment, debt, utilization, payment history, inquiries.
Based on the data points here, it exceeds the threshold.
Income matters.
Employment history matters.
Your tax forms confirm the income.
Debt, payment history, and many other variables all work together. Finally, everything combines into underwriting decision. Reason. The second reason is something most people never think about. Every application leaves a footprint. Need to figure out a budget for this.
These new options provide much better returns.
One application isn't a problem. Five applications in 1 week tell a very different story. Banks aren't counting inquiries. They're reading behavior analysis. Reason has to 3, delete debt-to-income ratio. A high credit score tells banks how you've handled credit in the past. But debt-to-income tells them whether you can handle more. Now let's add existing obligations. Your score is still excellent.
But your repayment capacity tells a different story. Now here's something that surprises many borrowers.
Both applicants have a 720 credit score.
But one borrower has 10 years of history. The other has only 1.
Banks trust a longer story because they've seen more evidence. The score may be the same, but the confidence behind that score is completely different.
Here's another reason good borrowers get caught off guard. Today, you're using only 18% of your available credit.
Here is your card and receipt. Thank you for your purchase.
Thank you, the bag is lovely.
Then, an unexpected expense pushes it to 72%. You pay the balance before your due date, but the bank may have already seen the higher number.
That's why timing can influence the underwriting decision.
Reason number 6, income verification mismatch.
The 6th reason has nothing to do with your credit score. Banks don't rely only on what you report. They verify it. Most applications match perfectly. But even a small difference can trigger additional review. It doesn't always mean a denial. Sometimes it simply means the underwriter needs more information. The final reason has nothing to do with your application. Every bank adjusts its lending strategy based on market conditions, inflation, interest rates, default rates. When losses increase, banks often become more cautious.
The same application that was approved last month might be reviewed differently today.
That's why a rejection doesn't always mean you're a bad borrower. Sometimes it reflects the bank's current lending priorities. So let's recap what we've uncovered today. A good credit score is important, but it's only one part of the decision. Let's break down all the factors. Banks evaluate the complete financial picture, not just a single number. In the next investigation, we'll uncover why two people with the same credit score rarely receive the same interest rate. Every approval, every decline, every interest rate begins with a story hidden beneath the numbers. Until then, remember, the credit score is only the beginning of the story.